we're gonna officially call the meeting back to order. I know we have quite a bit left to go through and reviews, and we want to, be as sensitive to time as possible. I do want to reiterate that we discussed that we would need to have further discussion on this, or time to, digest and make considerations about this at our next board meeting. So I would like to ask if maybe for the next portion of their presentation, we'll primarily Dawn and I will try to hold all of our comments or questions. And yeah, I understand. I don't know if any of the board members have any suggestions as to, the time frame. I don't know that we're going to, perhaps we can get through the entire presentation today. We want to give an opportunity for response by continuum. So if at all possible, we can somewhat hold our discussion. We'll move through the presentation, make notes. We'll see how we do by the end. Is that fair?
Like I said, it should go a lot quicker from here.
Okay.
In fact, the next finding, I'll just give you a short version of that. We did find some discrepancies between the number of Hardee County employees that were reported versus what we saw based on addresses on either W-2s or 1099s. And management responded that there was one individual that's listed as a Hardee County employee that resides in Polk County but works in Hardee.
Right, finding 2014-006 has to do with payroll overhead, and there are going to be, you're going to hear overhead several times during the next, comments. There will be 3 different types of overhead, so I just want to bring that to your attention. The first one that we're going to talk about is taxes and benefits overhead, and this was on the CLI payroll. An overhead rate was applied to each payroll period expense through the contract for taxes and benefits. The overhead rates applied were estimates ranging between 15% and 16.5%. Actual expenses incurred were calculated for each payroll period as an overhead rate. This rate was compared to the amount billed in the contract, and there were variances. From the CLI management response, overhead for expenses related to the project were estimated as a percentage and were applied to payroll as a mechanism to account for the variability of overhead expenses. Industry standard rates were used. And again, it's not out of the norm to estimate an overhead of 15% for taxes and benefits. However, what you had asked us to do was look through actual expenses incurred. So we did obtain the payroll records for how much was paid for benefits, health, things of that nature, and taxes, and compared actual to the percentage that it ended up being. So we compared line item by line item, and you'll note those differences in the detail. Finding 2014-007. There was also an overhead that was applied that we called general overhead. And this is again on the CLI payroll, which applies to both LifeDash and CLI. This overhead rate was an estimate ranging between 13% and 16%. Actual expenses incurred were calculated for each payroll period as an overhead rate. This rate was compared to the amount billed in the contract, and again, see testing by detailed line item. CLI's management response, overhead for expenses related to the project were estimated as a percentage and were applied to payroll as a mechanism to account for the variability of overhead expenses. Industry standard rates were used. This overhead was more in tune with a listing to justify the expenses for this type of overhead was a listing of pretty much everything else that was incurred towards the project. So it included several line items that were very minor, and this is one of the areas where we found it most efficient to test a sample instead of testing 100%. For example, on one of the months when the overhead was supplied or was prepared for us, the overhead schedule, to justify the rate, there were about 300 rows of activity, and we didn't feel it was efficient to go back and try to tie by dollar amount, so we tested this line item as a sample. And again, you'll notice when you go into the detailed report that each line item is specified. So if he said it was an estimate of 13% and it came up with 10%, then we would have a variance for that line item.
The next finding, 2014-008, had to do with subcontractors, and it's listed in the detail that in the actual report, but there were certain contractors that we could not tie back to 1099s or could not tie back to any of the And management states that contractors are paid on the 15th and the 30th of each month by submitting timesheets with dates, hours, and projects worked on. Some hours when the time cards are outside the sampling period, time frame for testing, the amounts were accrued and paid twice a month, which were then recorded on draw request. Next finding, 2014-009, has to do with subcontractor overhead. And we found in our testing of subcontractors that an overhead rate was applied to each subcontractor invoice that was expensed in the grant. There was no additional support provided to substantiate the additional overhead rate ranging from 13 to 16%. Therefore, the amounts that were expensed for this overhead were questioned. And management responded that overhead for expenses related to the project were estimated as a percentage and were applied to the payroll as a mechanism to account for the variability of overhead expenses. Industry standard rates were used. Subcontractor labor rates were also used to estimate expected operational overhead because labor costs as a whole were considered a good basis for estimating overhead in general.
Finding 2014-010 is CLI errors in billings. And there were some formula errors within the billing spreadsheet that led to errors in reporting. There were some instances where invoices indicated services should be allocated to other companies owned by Mr. Bond. There were some instances where proper support was not provided. There were some instances where recalculating amounts based on assertions from management did not support the expense incurred. The amounts are all noted individually in the detailed testing. CLI's management response, there were some errors in the formulas used to calculate amounts. These formulas were corrected. There is one company that submitted invoices for services rendered to CLI, Life Dash, and Bond Medical Group. Details were provided about specific services applied to specific companies for allocation of costs and payments accordingly.
Finding 2014-011 has to do with credit card expenses. In the finding, we found that the credit cards expenses submitted were from various companies. Several of the transactions were considered unallowable if proper invoice was not observed or if the business purpose was not substantiated. If you look at our detailed testing, we note the ones that applies to, and we did question those. Management responded that credit cards were used by employees for charges related to their duties. All charges submitted on draws were approved by management for the project. Not all receipts can be located, but all credit card statements were supplied.
The next comment is 2014-12, and this is the licensing. And again, to reiterate, this is the contract that we had discussed previously, which is a related party contract under the licensing, relates to the API. So during the CLI contract, the expense line item for licensing was based on a contract between Life Dash and Continuum. The contract was for end user software license agreement and service agreement. A detailed listing of services rendered was provided as support for testing. This contract was executed by Mr. Bond and both sides as owner of Life Dash and CLI. It was unclear what the support maintenance licensing fee from 10/1/2012 to September 30th, 2013 in the amount of $10,417 per month was billed for, considering all salaries from Life Dash and Continuum, all purchased equipment, all leased equipment were previously and continuously charged through the IDA grant. In addition, as LST, the development contract of $1.4 million and the API fee of $615,000 were already paid through the IDA grant. So in a detailed sample, you will see that the $10,417 each month was questioned. CLI's management response. Licensing of software technology, etc., is an industry norm. The licensing fee is the right to continue to use the technology with the requirement of Life Dash to allow the ongoing use and upgrades to the Life Dash platform. Life Dash's development of its intellectual property predated all agreements with the IDA and the investors of Life Dash expected revenues. Investors of Life Dash expected revenues from its developed technologies. Additionally, the CLI had the ability to resell that technology to other entities and therefore limited Life Dash's ability to return on its investment. Regardless, the amounts received from licensing the Life Dash technology to CLI remained in Life Dash and were used on the project as outlined in section 4 of the assignment and modification agreement. No amounts were distributed to stockholders of Life Dash. As the project scope and demand grew, CLI agreed to acquire Life Dash assets and the fee ceased on September 30th, 2012. The acquisition of Life Dash allowed for all intellectual property and assets developed before and during the time frame of the grant to now be property of CLI, thus adding value to the overall project.
And the final finding that we had is 2014-13, 013, CLI rent, data equipment, lease expenses. During the CLI contract, the expense line item for rent / data equipment lease expenses was based on a contract between Bond Medical Group and CLI. Travis Bond is the owner of Bond Medical Group. The contract was for leased hardware. The amount consists of subleases to 7 external companies during the life of the contract. The original leases were executed by Bond Medical Group due to requirements from the external companies. It is unclear whether it would have been more cost effective to purchase equipment instead of leasing. CLI asserted that each lease was only used for the project. Individual leases were provided as support for testing. There are variances in the actual lease expense incurred and what was billed through the contract. See the detailed testing of each sample period tested for question cost line item. And management's response is leased equipment was used for the project. Amounts used in the draw requested represented calculated amounts from the lease documentation and amounts debited automatically by the leasing companies from Life Dash and Bond Medical Group checking accounts. Expenses for this category changed as new leases were created, existing ones updated, and insurance and taxes on lease equipment changed from time to time. And when you do look through the actual report itself, most of the pages, which are in the back, show the detailed testing and the detail of where the question cost came from. So again, we'd like to talk about question cost, and those are costs that we are questioning. Those aren't necessarily, we don't have the authority to disallow the cost. That is your responsibility and your decision and management's. And we're suggesting that management investigate these items, determine what should be disallowed and what may be allowable, and then come to an agreement as far as what may or may not be reimbursed.
Do you have a total amount that you,
Well,
is it written down somewhere on here?
We are getting there.
Oh, okay. I'm getting ahead of the game.
that's a good segue to the next slide.
We're one side ahead. We go one back,
What page would that be?
one more back.
47?
And the slides were on 46.
As far as the next steps, like I said, we are suggesting that after reviewing the report, that management and the board of directors make a determination or make a management decision as far as which, if any of these question costs would be disallowed or which ones would be allowed. Disallowed cost can be projected across the population. If you feel like it was a cost that was representative of the population, you could project it to the untested piece of the population. And we were recommending that, as we've already discussed at length, that there be a reconciliation and closeout report as discussed in the first 3 findings.
Again, this is the summary of testing table. So this quantifies our data by category. The areas to specifically focus are starting in CLI 4 through 7. Again, as we had discussed earlier, the draw requests 1 through 3, although the cost is questioned because actual expenses were not substantiated for that month, it does not mean that they were required to be incurred during that month. So I don't believe that there's anything to project during that period or to, I guess, allow or disallow. It just was the fact that in total, when you, go through that contract, it wasn't required to be spent at the same time frame as the monthly draw request. So the draw request 4 through 7, you can see that subtotal under question cost is $140,000. And we'll go to the next slide. And this is a summary of what entails within that $140,000 and which findings they relate to. So we are on slide 48. The bridge billing and excessive expenses, that $44,711, that's defined in finding 2. And
Can I
that is,
interrupt a minute?
sure.
What page or?
Yeah,
You don't have, you're talking slides, we don't have slides, okay?
Ooh, I apologize. There is no schedule of that
That,
in the report.
this is in addition to what's actually in the report. This is part of our presentation. I'm sorry.
I apologize, I did not realize that. So that being said, I'll give a couple more minutes on this slide since you don't have it right in front of you and you have to look at the screen. So the bridge billing and excessive expenses, that amount is, that $44,711 is not something that could be projected or allowed or disallowed. That just simply consists of the advance that needs to be reconciled out in the closeout report. The following items are listed there. There's a CLI payroll overhead from taxes and benefits, and during our sample period, $25,412 were considered question costs that relate specifically to the taxes and benefits. Does that make sense? That's working. So the payroll overhead for general, it was $3,928. The subcontractors was $5,010. Subcontractor overhead was $13,017. Errors and billings related to question costs in the amount of $11,808. And the licensing fees were $36,459, quantified by category. And then, of course, it relates back to the applicable finding.
I should back up. This isn't summarized in the report, but what is in the back of the report is the detail of everything we tested. And if you look at the very bottom of the month that we tested, we have a column for question cost. That total question cost will agree for that finding up to, well, not this one, but the previous slide for question cost per month tested.
Mike, would it be possible, go back? Just, and I don't think you have a slide like this, if you do, I don't recall it, and I apologize, but the 44,711, we know is a one-time charge, so if it was deemed to be disallowed, double billing, whatever you wanna call it, it would move over to one more column. The next one, though, is over 25% of the draw request and 42 to 43% of the money. If that payroll problem was extended throughout the project, it would grow from 25,412 to what?
I don't have that by line item, but
But if we were,
approximately.
If you were to
if we were
project out,
using normal processes,
there are certain ones, if you could project that out to the population.
my whole point here is if the board had a way to look at the costs that were one-time charges and the ones that were extendable over the full project, then they could discern on what ultimately would be disallowed or not disallowed.
Well, if that would be representative of 43%, then
It's representative of just the CLI portion, which is 30% was tested during the CLI portion. And that relates back to page 8 in your report, that summary testing schedule, and the sample draw request, and you can see from there the total percent of project dollars tested under just CLI, because those payroll-related expenses relate only to the CLI portion of the contract. So it would, in theory, you would take the 25,000 divided by the 30%.
If we disallowed all of this, where would we be?
$323,560.
So if we extend them throughout the project, we'd have a disallowance of 323,000.
And then you would have the advances of the 400,000.
That's, in then there would be the final closeout to make sure that all the expenditures could be accounted for. But how many dollars, I should say, could be accounted for by actual expenditure.
So how would you deal with it? Does Mr. Bond write us a check back?
Uh,
Do we determine that it was, they were errors, they were fraud, they were what? How do you reconcile? You're saying we need to reconcile. This is the essence of reconciliation. We also know he put 1.5 million more into the project. Do we take that money off of the money he's put in and say, okay, you say you put 1.5 in, we're gonna take 300,000 off, so you only put 1.2 in. What does it mean?
That is a board decision, and that is the contract term. That's why we said the contract term extends to June 30th, so that's a board decision to allow any potential question or disallow cost to be applied to the additional money spent by Continuum after the draws ceased from IDA. That's a board decision.
Do we get law enforcement involved?
I think they're already involved.
Okay, so, I know that we discussed we'd like to have an opportunity to also hear from Travis and Continuum. Does the board have any, immediate questions to be addressed with Clifton Larson Allen? I think we all acknowledge we're gonna have some more discussion on this. But at this time, we will go ahead and dismiss you for the moment, and we will discuss it. Mr. Coleman, take your seat. Take your seat.
I thought you said the public was gonna get a comment.
I did not say that.
I'm sorry.
Mr. Bond, if you would like to come up, we'd like to hear from you on responses. Obviously, we've been made aware of your responses in the audit. I don't know if you have anything that you would like to expand on with your responses.
Good afternoon. It's been an interesting process. One, we've appreciated the opportunity to produce all of our financials, all of our bank statements, all of our payroll records, all of our canceled checks, all our time cards, and just about all of everything that was asked for and that we could produce, including credit card statements and so forth.
We only hearing part of the conversation, please.
I think a couple of points where if I'm looking at your position and how you would address the transition period, there's just overlap. And you would expect overlap in the transition between one company acquiring the assets or the responsibility of another that there is this transition. If you knew of an employee that was getting ready to quit, you would hire a replacement, you would expect an overlap. And so in that period, you would have an employer who was paying twice for the same position because you were asking one employee who was leaving to transfer their knowledge to the new one. And so from that perspective, you would see that you might be paying more for that position for a company. There is no, the analogy is the same between two companies. And so what we have done and what is consistent with refining the process and an accounting that shows people were working in transition during the project. When we brought up the conversation about Tech River as an entity, it was something beyond what LST had talked about. It talked about creating a single product and it had a single point of reference in terms of its deliverables, along with the Tech Center. We came in and expanded it to a formal training program and did a lot of other things. And at that time, we said, if you will give us an advance, then we will complete an acquisition of LifeSync, and we will transition that as well as then add more elements to our deliverables, which is outlined in section 4, and we did that. We then did at the end of the year, once the draw request format was agreed upon by the board, we went back and recreated a draw request for September, October, November, and December on the last day of December. And we presented those in January. And in January's request, what we were attempting to do was to tie draw requests that were as close to an estimation of what we were spending on the project as possible. And so it's no different that if you're going to budget what your electricity would be next month, you would probably look at the prior month's bill. And that's what we did, and that's why all the draw requests were created. When you look at the findings that they have, or what they call questionable costs, it is not to say that none of this money was not spent on the project. It was all in excess of what we took from the IDA was spent on the project. A lot more money has gone in to the deliverables, as outlined in section 4, than what the IDA did in terms of funding draw requests. But if you take out, if you look at this slide, you don't have it, it outlines $140,000. If you take, and we can have a discussion on the licensing agreement, you take out the bridge, any questions about the bridge, you're talking about draw requests that was over 98% accurate. 98.3% accurate. That is some really good estimating, in my opinion. So I think there's certainly a lot of things that are going around in my mind over 9 months of doing this. So instead of sort of regurgitating all of that, I think probably it might be best use of your time if I just answer any of your questions.
Any questions at this point from any of the board members? I think that we have received a lot of information today, obviously, and have not had a lot of opportunity or time to review and digest all this information. So I'm sure we will have questions. I don't know that we have all of them formulated at this point. But I for one would like to certainly explore these issues, these things further in perhaps our meeting next month. I know we will probably need to spend a lot more time discussing this. In addition to that, I personally, knowing that we haven't really heard from you, not at your fault or ours, but we have not heard from you on the project directly to hear, exactly where we're at and what's going on with the project. So, I feel like there's a lot more that we would like to have you come back and address and talk through with the board and make a presentation on. Would that be fair to say for other board members? So I don't know if any of the board has any questions at this point on the information we've been presented, either from Travis or from Clifton Arsenal. Dottie.
I do have one comment, and because I want to be sure that we're not left with the wrong impression here, but I want to be clear that the contract with Continuum was a draw request contract, correct? It was not a reimbursement.
No, and I believe that the contract was, at least there were changes to the contract that were acquiesced to month by this board with the monthly presentations. And you cannot fully understand the meeting of the minds between the two parties, Continuum Labs and the IDA, without fully comprehending each monthly presentation.
And we gave the last draw request was in January,
Yes.
correct?
Yes.
That's when the last money was received, which paid what we were obligated to pay.
Yes.
But our actual contract date was through June. So in expenses that were incurred from January, after January, February through June, he had expenses that he had to pay, correct?
Yes.
Well,
So,
and even today.
yes, and all the way up to date, because, I'm just trying to get to the contract end date. So, in my mind, I'm just trying to think it through. If there were some discrepancies, since the contract runs through June, he's had expenses well over and above that discrepancy number that I heard. Now, I know we're going to ask for a final reconciliation, but I'm just trying to clear it in my mind before we leave here today, and to hope we clear it by stating this in others' minds, but is that not correct?
As of, Travis, how much money above the $7.25 million do you estimate, cash and other contribution into this project?
To date, we're probably close to $11 million totally spent on the project.
So there's about 4 above the IDA 7.25.
About, yes.
There is one other part to this that hasn't been mentioned today, but there are between 20 and 30 people working in that building. They are working on a viable project. And that was our objective. I can't tell you that today it's going to be a resounding success and definitely into the future, but it is alive and well.
And I think I would like to put somewhat of a bow on that if I can, because I think that, you know, a disallowed cost, a questionable cost, it just sounds nefarious. It's just an accounting term that, you know, at first blush, you know, sort of takes you back on your heels. Understand that if I could not produce a boarding pass, now it's a questionable cost. Even though Amex would have clearly said a person went from point A to point B, that you could even show that they ended up in 8 meals at point B. It was a questionable cost if I could not come up with a boarding pass. So it doesn't mean that money wasn't spent on the project. Again, I think I want to reaffirm that the contract dates, even though it's extended to June 30th, has not in any way stopped what we're doing on the project. I mean, as you notice, we've been very transparent to the level of ability that we can under the current atmosphere through the Hardy Advocate to show you that we closed a round of funding of $4.25 million. It is very important to note that this is outside formal institutional investors' endorsement of the value of the project. The value that they gave on the project exceeds the amount of the money that was put in by the IDA, meaning that the value exceeds cash put into something. The project as an ongoing value has appreciated, like the value of a home has increased. We have hired numerous people based upon many changes that CareSync now is aligned to do, and we expect great things to happen. But when you add in the value of what has gone in from various sources, you start to get into the $13, $14 million range. And when you start to talk about interactions between, you know, LifeDash and Continuum, yes, I am both CEOs of both companies. I don't know who, in the absence of a CEO, is expected to sign an agreement that would have a real impact if it was breached on either side except the CEO. So that's, you know, one of the responses that I would say. But recognize that the inputs to the project, all dollars have gone back. Even the 2 employees that moonlighted, for lack of a better word, still were asked to perform their daily duties, and the revenues that they generated were profit. That money went into the project. There has been no funds distributed outside this project. And so LifeDash was even acquired by Continuum, and those investors that put money into LifeDash did not get a return on that. And so all things at the most highest level, whether it's James Grant, Travis Bond, or anyone else that has had a hand in this project, I can honestly tell you, have done all that they can with any resources that they had an influence on, have pushed towards the spirit of Section 4 of this agreement. We will continue to grow in 2015. Centers for Medicare and Medicaid, known as basically the federal government, will pay for CareSync starting in 2015. That is a $16 billion revenue opportunity. And if you Google us, you will find that not only are we like the 400,000th most popular site in the United States, but we are 1.1 million overall in the world. but it's nice to see that other people now consider us competitors on their website. Whether I could find a boarding pass, whether you want to, debate whether we shouldn't have used subcontractors as an element to guesstimate what overhead expenses might be. The number of dollars of investments is multiple over any of the questionable costs. The opportunities going forward fully support the optimism that this project has had. And I think that you can, at one level, take great relief in the fact that there were 3 institutional investors that did a great amount of due diligence on this. 4 law firms, multiple accounting firms, and they wrote millions of dollars worth of checks into this project. So other people have endorsed this stuff.
Just so I'm clear, and Tricia and Mike may have to answer this, but what they deem a questionable cost, they're not saying anything is wrong necessarily there. They're telling us that they want us to further look into those items to be sure either whether they were completely in line or not, correct? Is that what you're saying when you call it questionable cost? It's just an item you could not completely determine as being allowable?
Right, question cost is a cost that is a potentially disallowed cost. But we're suggesting that management work with Mr. Bond, investigate it, and find out if it was a legitimate expenditure or should be a disallowed cost. That's a management decision, and we can't be part of management and be independent. We're just reporting what we found.
And so upon further examination, we may find that those costs are completely allowable under our contract, correct?
That happens quite often in the federal grant arena, yes.
I would make one other comment though, before we spend a lot of time and extra money on this. I'm not certain what it's gonna prove. We could determine today if we're gonna disallow all of those costs, extend them over the whole project, and you have a $300,000 and some odd figure, and say we're gonna disallow it. What does it mean? I still don't know how you apply it. If we can ultimately get to some remuneration obligation document that says with certainty that Mr. Bond came to this community and created a business that paid us back for our investment, it comes into play. And I hope that we can get back to those negotiations where we were in May, but we're not there. But when we do, we can take all of that into consideration. If you disallow it and take it off the money that he has already put into the company, I don't know I just don't know what it means.
I have one more question, Mr. Bond. As of now, what is your total annual payroll for the employees in Hardy County?
About $1 million.
Okay.
Let me, just ask a question. The contract, is the contract that we've got with them or had with them is a normal type contract for public money?
I don't know that there's a normal contract for this money. I think we could debate that forever. It's been an evolutionary process, you know that. There's been philosophical disagreements on whether or not we should have ever even initiated this contract or this project, but we did. And we're here today trying to determine whether it should continue, and that $1 million payroll should contribute to this economy. And I don't know how to really answer your question.
Okay, well, there's some, we were talking about, this was, basically all they need to do is come to us, ask for the money, say they're doing a good job, get the money, and come back next month. I'm not sure that's a good contract that, and there's
So
nothing in there that says they have to spend the money in the month that they get it for back money, and there's no reimbursement things, and, I don't know, I'm just asking that seems like to me, when you're dealing with the public's money, there needs to be a lot of other things in there other than just give them the money and don't worry about it.
Well, I think that's a fair criticism that, you know, if we had more knowledge at the time of how to, you know, better, be the architect of the contract and what, you know, we would have, should have done, I think that we would have had a better product up front as far as our contract. So I don't disagree with that. I don't, you know, I certainly didn't sit in my position, and I don't think any of the board members sat in their position thinking that there would not be a reconciliation at some point with some level of accountability for the funds that were spent. But I think there was an agreement in the beginning that, you know, we wanted Mr. Bond and we wanted the project to be able to carry on with some certainty that, you know, if he's gonna go out and recruit and hire someone next week, that he's gonna be able to carry on the month after that, and the month after that, and the month after that to work on this project. So, you know, had we known how to better structure that, I think that we could have come up with a better contract initially. But I don't think that there was I don't think any board member would say that we didn't think that there would be a level of accountability, and that's where we're at today. You know, we're at the place to audit those funds and review those funds and have some accountability for how they were spent. You know, personally, I would like to hear a lot more, you know, to make a decision or a determination on what, you know, what to do about these findings. And I, you know, outlined some of that to you just a moment ago. You know, I don't know I'm in the same position as other board members, and I don't know if we want to have the debate today, but, you know, I would like to see a presentation on the accomplishments, where you're at. You know, I agree with Dottie, knowing and understanding what the payroll dollars are currently, what are your projections for 2015, 2016 that you feel comfortable committing to at some level, because I think that's a discussion we need to have, you know, moving forward. What's the future look like for this project in Hardee County employment? You know, those factors are all very important to us because we're trying, you know, that's our assignment to create jobs in Hardee County. I don't know what other board members would, you know, feel like would be an adequate accounting of, you know, obviously this process we've just gone through has taken 8 months.
700 hours.
So, you know, I for one am not gonna suggest that we go through the same process to dig further into the items, but I think that there are some other things that we can do. I don't know if you have any suggestions on how can you demonstrate to the board with documentation, you know, your investment in this project. You know, do you have a way to demonstrate that from, you know, January to present, what your investment? I mean, obviously the company's still running, there's still people working there. You know, is there some redacted payroll information? You know, do you have any suggestion on how can we verify that? Because to me, that's a big factor. I want to know, you know, how you've been maintaining and running the company and what investment you've made behind our investment.
Yeah, I think there's a couple things that we can do to satisfy how we continue to have ongoing impact in the community. And we would be willing to share redacted personal health information, personal information of payroll records to CLA to verify, you know, that our hires are there. There'll be 29 people that will be employed by the 29th if everybody accepts their job offers. That number exceeds our estimates, you know, for this year. I agree with Mr. Lambert. If you look at this project as a 3-year project, as it was intended to be, we had substantially, you know, we're very clear in the message that the cost of this project would exceed $7.25 million over a 3-year period, and that we would find extraneous sources. We did that. We obviously want to give you all the information that you need. Based upon, if they've done 700 hours, you could just kind of close your eyes and imagine what our side is in terms of producing that. I would certainly say that we easily did 700, if not more, between the people that took time to do this project, in terms of responding to CLA's requests. I think one possible thing that we could do, but it's going to end up to be an exercise just really in paperwork. In January, the draw request was only created for what was left in the amount that was in the grant. So it was a $50-some thousand amount. If you knew that my draw requests were 98.3% within actual that I submitted, I would also say that Clifton Larson did not give credit for when we spent more. And so if we said we spent $10 on something, we really spent 15, they would give us credit for 10. And so there was some categories where we did spend more, and if you look at the draws, there were times that we didn't submit invoices at all, but still incurred those costs. So regardless, we could go back and create a full draw request for January. It would be underfunded by $250,000 if you look at the average of a $300,000 a month draw. That would exceed the questionable costs here. You could multiply it any different ways you want to, and by a draw request for February, any of those questionable costs on a multiplied basis would then be extinguished, meaning we spent the money. So if you want to shift it from a disallowed column to the now you must spend it column, we have far exceeded the must spend it under any number of scenarios that I've seen. All I want to do is just be certain that whatever you want, we want to give you, but recognize that we don't have another 1,000 hours to spend on something that appears to be no breach of the parties. No money has left. They have every canceled check. They have every bank statement. I mean, there's, and even the wire transfers are between companies, and they have those bank statements too. I don't know, spending another $10, $20, $30, $40,000 in accounting fees on both sides will get you what you want if really what we could just do is submit a full draw request for January, February, March, April, June. All it's going to sit there and show is that our draw requests are going to exceed the amounts that were allocated by the board for funding.
Any suggestions from any board members on what they would like to see further discussion on in January?
If we do, what he's suggesting, we get the draw request for January, that gives us plenty of, items that we can use if we determine some of the others are not allowable. You have something right there you can just grab and go,
I think we
in
can,
terms of capturing another we say 7.25 was adequately spent.
I think we can determine what's allowable and what's not allowable. The largest of the three, how much was it total, 300 and what, Tricia?
323, I think you said.
How much of that is
There's
the
an
license?
advance piece
How
too.
much of that's the licensing?
Probably 130 or so.
So it's the largest single category. So probably the largest decision you need to make is it okay for LifeDash to charge Continuum Labs a licensing fee? Remember, he has 5 other investors, or had 5 other investors in LifeDash that expected a return. Basically, we'd be saying, you can come plow my field, but if you use your own tractor, you can't charge for it. If you go lease a tractor from someone else, you can charge for the tractor. And I feel like that he has a right to do it, but it looks scurrilous when LifeDash, the right hand's billing the left hand. But there were 5 other investors that expected return on investment. If you disallow it, okay, you disallow it. If you accept it, it reduces the 330 to 200,000. And probably most of that, the 44,000 can be reconciled one way or the other. That's the money that was left over after the closeout report. We can determine that. The other numbers where the spreadsheet computational errors exceeded actual, they probably should be disallowed. But again, I asked you, what does it mean? Do we just take it from the extra money he's put in the project? Once we determine that, then we can reach some decision.
The goal is to get to 7.25 million of allowable expenses. That doesn't seem to be like it's going to be a problem at all.
Well, and, I mean, to to be honest, I'm most concerned about, demonstration and continued performance, because at the rate that they're putting out payroll in Hardin County, I'm not, you know, they can already demonstrate coverage of those costs, you know, but we have a whole other question, or a whole other issue that we need to determine at some point in the future, of what, you know, what does our future relationship look like? And, you know, that's another debate that we need to have. So I think we're all in agreement that we would like to, you know, see some supporting documentation for what your investment, above and beyond since January, so that we can consider that as a part of our debate and discussion. You know, I don't know if anyone has anything else to add to that, but we do also need to have a discussion about the current contract. The contract was extended through June, so technically we are currently not under a contract, and I think that we certainly should be. I'm not sure of all the legal ramifications there, but that is probably something that we do need to address today, and have some discussion about, you know, how to remedy that in the interim while we work through some of these other issues. Does anyone have a suggestion?
About the contract?
Yes.
I don't know how many times I've said in these meetings, we need somebody that knows how to write professional contracts to write these contracts for us. The contracts that we've had, in my opinion, they just don't get it. I don't know who's writing them, but we need to make something that keeps us out of trouble.
We have a contract that we, for some reason, extended to June, that expired. We've not been able to take up this issue. I think it would be prudent to at least extend that contract till March of 2015 to give us time to determine what action we're gonna take.
Well, if it's the same contract we've been working under, that's why Scott said it's best now.
Well, I don't.
Donald, you have $7.25 million in a contract. It started with a contract that was with Life Sync. We did an assignment and modification agreement that put every component that was recommended by the Auditor General into a new contract. We have extended it with one modification agreement. We certainly shouldn't abandon that document at this point. That would not be smart.
I'm not smart.
I mean, I would agree that, you know, moving beyond that, we need to discuss what, you know, what are the next steps, but, you know, right now, we don't have a contract. So, you know, to debate what all should go into that, and put that off another month, my preference would be that we try to have a contract worked out today that we can at least work under in the meantime while we work through some of these issues, but not that it be the final, you know, closeout contract, or this is, you know, where we say we're good with what's going on with continuing for the future in Hardin County.
Well, let me say this, regardless of the mechanics of extending an agreement, we're here, our roots are here. I mean, we're not going anywhere. I mean, so while you want to look at some of, you know, some legal language, you've seen the ads in the paper, you've seen more cars in the parking lot, and we're gonna continue to grow. The owners of Kerosene have full expectations to continue to invest more money, and a disproportionate amount of that money, well over half, is being spent in this county. And so, regardless of what a new agreement may say, we're not going anywhere. We're not trying to say we want to leave or do anything. Only thing we want to do is continue to grow as an organization. And so we will do whatever the board wishes for us to do, but we want to continue to grow what we've started and we've worked desperately hard over the last 3 years doing. You know, probably in totality, when you add up all the receipts by the end of this year, you're talking about $11 million worth of investment into this project. We want to continue to see it grow.
I was just gonna say that, back on the contract, this was one of, I wasn't at
simply tried to take the dialogue between the two parties and craft it into a written document.
Well,
And it does that.
and I think that it would be fair to say also that after criticisms from the first year to the drafting of the continuing contract, and even I think that our auditors made commentary on how much more detail began being provided after we entered that second year in the agreement with continuum. So, you know, it's unfair to say that we didn't make any improvements along the way as we gained knowledge. I think it's absolutely fair to say also that there probably are not many contracts like this. I'm not sure that we could get an attorney with proficiency. You know, there are a lot of areas of technology that, you know, I don't know that you can quantify the value of an API. I mean, it's just too new. There's not enough expertise. I'm not certain we can find an attorney that could have crafted anything any better than what we came up with. You know, obviously it's been a very complex, complicated project. But, you know, I think that those are fair criticisms of, you know, where we've been. Did we make changes and corrections along the way? Yes, we did. Do we still have a company that's operating and now with $1 million payroll in Hardee County? Yes, we do. I'd like to ensure that that continues. But, you know, I do think administratively there are some issues that we need to address. We need to, you know, discuss the discrepancies, and whether or not we're going to, you know, at least extend the contract so we are currently operating under a contract, not with any, you know, additional clauses on our behalf or theirs, but we're not currently under a contract with them to do anything.
Madam Chair, I would say this, that I don't think the issue is the contract. I think the issue is risk. The contract is what it is, but there are those who have an aversion for the IDA taking risk with this public money. Some accept it, some don't. This board took risk. Took risk, placed its faith in these men to come here and build a company from scratch. That's what we did. Unfortunately, it is still going quite well. We have not really had a misstep yet. With all the people I've talked to over the past years, it all comes back to why did you take the risk? We took the risk because we felt like it was the best way to foster and promote economic development at that particular moment in time. And people are still there. That philosophical difference is going to exist. It's going to cause political disruption in this community, but it is what it is. There's no law against taking risks that I'm aware of with this funding stream.
How long do you take the risk?
My gosh, Donald, there are 29, there are 20.
For the rest of our life?
What?
There's
We-
no additional,
yeah.
there's no additional money.
It's not asking for money, we're not giving you any more money.
This is not the public's money, the citizens' money. We need to be careful with it.
So Gene's question is, if we extend the contract, how does that obligate us? Ken, would you like to, speak to that?